What is happening, Bigger Pockets land? It's Matt Faircloth. I'm super excited to be with you guys today. Thank you for watching. If you guys are scheduled to watch this, or if you just tripped upon this too and you're watching now, either way, I'm grateful you guys are here. This is our regularly scheduled program that I come and join you guys on Mondays at noon. So if you guys are just tripping upon this, stop right now and put it in your calendar. Monday at noon Eastern Standard Time. I'm going to be here with you guys on Facebook, on YouTube, coming down the pipeline at you guys, talking about all kinds of great stuff, interviewing Bigger Pockets authors, interviewing Bigger Pockets contributors, interviewing real estate great folks that have either contributed to BP in one way or another, and getting their take on the world, getting their take on what's going on, getting their take on a lot of different things, bringing them here to you guys so you guys can interview them. This is one of those points you guys can access a lot of Bigger Pockets. So it's Monday at noon Eastern Standard Time every week. Be here, be square. If you're not here, you're going to miss it, but you can watch the recording. If you're not here, it's okay. But I'd love for you guys to be here live. So put in your calendars, Mondays at noon. Now, I wrote an article for Bigger Pockets the other day about why is it so hard to get a loan right now? It's a good question. So the article addresses what's going on in the lending world, and the article is doing really well. A lot of folks have commented, and that must mean there's something good in there. So I really want you guys to take a minute and check it out after this. It's on the Bigger Pockets Facebook feed. You can also get it on biggerpockets.com in the Bigger Pockets forum. We'll put that in the notes here so you guys can check that out. But please check that out. Comment on it. Watch the YouTube video that accompanies it on my YouTube channel, which you can get to by going to youtube.com/DeRosa Group. And that. So those are there for you guys to check out. But it's a really relevant current conversation that we need to get into about why is it hard to get a loan right now, and what to do about it, and how to get a loan even though it is difficult to get loans. So check that out. Today's guest is Amanda Han and Matt MacFarland, and we're going to be talking about some really cool stuff. I want to take a minute before I bring them on and tell you guys about their amazing books here. This is the book on tax strategies. This is a great book. Let's say this is like 101. And this is 202, but you guys need to read both of these. I've been through both of these books. These books are not just books you guys need to read on April the 15th to make sure that your taxes are compliant. These books are absolute manuals on all kinds of things. These books talk about 1031 exchanges. They talk about whether or not you should have an LLC. Yes, you should. I'll address that right there. But there's a lot more in here about how to set up your LLC, about what LLCs actually do. There's things in here on opportunity zones. These are books very relevant. They're not just dated books to keep on your shelf to collect dust. These are books that are talking about today's issues. And we're going to talk out even more about today's issues with our guests. Let's go ahead and bring them in. Amanda Han and Matt MacFarland, welcome, guys. And I want to thank you guys for taking the time in writing these books, because these are great resources that people should keep on their shelves to learn everything there is to know about tax code. It's really not about tax code. It's about how to leverage taxes as real estate investors. And that. So what are some things that you think, again, it's like I wrote a book for Bigger Pockets called Raising Private Capital. And at the end of the day, it's almost like having a child. You love everything about the book. But I'm going to put you on the spot and ask you guys, what are like two of the most important things? Maybe each of you guys pick an important thing that are in both of these books that you think real estate investors need to know. Give me like the why that every real estate investor should pick up the advanced copy and the 101 copy of this book.
Yeah, thank you. Well, thank you so much for having us today.
You're welcome. Thank you for being here. I'm sure you're busy. Thank you for being here.
I would say, the feedback we've gotten from a lot of people that's read the books is actually just that taxes don't have to be scary. It's not a tax codes and regulations book. And we tried really hard to not get too technical and involving the law, but the book is based on just client stories of what can be done. How do you do it to get the benefits of the real estate without involving all of the kind of the nerdy CPA mumbo jumbo language that Matt and I use all the time. So I think that's the main thing to tell people. I know a lot of people think, oh my gosh, it's like slitting my wrist to read a tax book, but it's really a lot of stories, some good stories, some horror stories, some things that are kind of funny. So yeah, I think that's the main takeaway, is to read it. Don't be scared about it. You don't have to become a CPA, just have to know kind of what works and what might not work to help you save taxes.
Cool. And if you're concerned, then try it out. Bedtime reading. If it puts you to sleep, then there you go. It's a tax book. But if not, then we succeeded.
No, I get it, but I do think that what you guys have done in these books, and what I commend you guys for, is you've made something that's extremely complex, extremely confusing, and can be bedtime reading. But it's not. You've made it approachable and understandable and relatable. You guys there's a chapter in here on how to deal with short-term rentals. That from a tax perspective, that is a great niche that more and more people that are Bigger Pockets followers and fans are dealing with on Airbnbs. And I think that you guys have addressed the real issues that real estate investors have today in these two books. So guys, we have it in the notes here. Do yourself a favor, go pick up these books. They're not snoozers. They're good books that are going to give you guys really great resources. So pick them up. You're going to write all over the margins and implement a lot of great stuff that you guys can put to work in your businesses and use them as reference books. I mean, read them cover to cover, but use them as reference books on when you encounter a tax issue. Here they are for you guys to use. So go to Bigger Pockets /store and pick up a copy of these for yourself. So a quick note to those of you guys that are watching, for everybody that's watching this right now, do me a favor. I want to give some shout outs and some Matt Faircloth patented internet high fives. Give me a shout out on where you're from. Give me a geotag. Tell me you're Larry from St. Louis. Or Sally from San Francisco, wherever you guys are. Give me a shout out on your geotag, and I will give you guys a shout out if I can. So make sure you pop that into the comment section, because I would gladly give some shout outs. We've got comments from let's see, Jonathan. Welcome, Jonathan. Thanks for being here. I got Dennis from NYC. Hang in there. Wait, I've got Gloria from India. Welcome. We always go global here on the Bigger Pockets media, because Bigger Pockets is that great of an organization. We've got people coming from all different places of the world. So thank you for being here. I love it when I get Amanda and Matt. I love to get people from New Zealand sometimes, because it's pretty much about as far away from us as you can get. So I like to give them a special shout out. So here's a high five for you guys for being here. I appreciate you. A few more. Let's see. I've got Angelica. They're already hopping in, guys. I've got Angelica wanting to talk about C Corps. I've got Angel wanting to talk about SSI. Let's see. When people get their SSI streamers and check, people also get Social Security. Okay. A lot to talk about here. When will people get their SSI and their what do you want to go there, Amanda and Matt?
Yeah, I think there's a question about when will people who get SSI receive their stimulus check, maybe?
Yeah, I think that's what it is. Yeah, I mean, I know a lot of checks have gone out. Checks haven't gone out. Well, let's address it that way. Yeah. And we're going to get into the CARES Act, and people, they're fast forwarding us, Amanda and Matt. So we got to get in that.
Yeah. I mean, a lot of people have already received their economic impact payment, or otherwise known as stimulus check. The IRS has now really updated their website as of early last week, where you can check on the status. So if you go on the IRS website, it says it's actually Get My Payment. So if you search IRS Get My Payment, and you go on that site, put in some information, and they'll tell you what date you can expect the payment if it hasn't already been provided, as well as you can now enter direct deposit information. So if you have a new bank, or you used to get refunds by paper, but now you want it sooner by direct deposit, you can go on the IRS website, and it's it's working pretty well now. It wasn't really doing well the first week it came out, but now it's much better.
Yeah, cool. I mean, obviously with anything, it's the government. So give it time. They're working out their kinks, but that's what they're hoping for. Yeah,
they're the government. Let's give it with it. They're not going to be the streamlined entrepreneurial machine like we are, or anything like that. That's fine. Let's give a few more shout outs, and I'll give you guys to give a brief overview of the CARES Act, and just give it. We're going to give you guys to give us a brief State of the Union. Okay. And I'm going to give you a few shout outs real quick. I've got Ajing from Northern Virginia. I've got Lillian, my good friend. Welcome, Lillian. Thank you for being here. I got Raquel in Los Angeles. I got Blake checking in from San Diego. Welcome, Blake. Thank you for being here. I got Joshua from Afghanistan. Joshua, you are a regular, and thank you. I appreciate you. My guess is, you haven't said this yet, my guess is you are serving the military over there. So thank you for your service that you're doing for us over there in Afghanistan. Thank you for joining. We got people we are all corners of the globe, Amanda and Matt. People are lining up to be here to hear you guys talk today. I'm super excited to have our audience. If you guys are watching, do us all a favor, do Bigger Pockets a favor, do me a favor, and do Amanda and Matt a favor. Take a minute and like this video. Give a heart to this video if you love it. Give it a like if you like it. That's okay. We'll take either one. And even share this video for someone that you think might need to hear some tax strategies, or even just share it on your feed with pride by saying, hey, listen, guys, my feed, I am a real estate investor. And these are a bunch of real estate investors talking about real estate tax stuff. You guys need to join the conversation. So put it on your feed, share it. Help us propagate these messages so more and more people can hear what Amanda and Matt have to say today. Lupita, your questions are answered. Lupita wants to know, please recap all the CARES Act's benefit for investors. Only for you, my friend Lupita, because you asked. Here we go. So Amanda and Matt, take it away. Can you guys give us just a rundown on where we are with the CARES Act, how it benefits real estate investors? State of the Union, take it away.
Yeah. You want to go first?
All right. I think one of the keep in mind that this is probably the most changes in the tax law in the shortest period of time that we've seen in 25 years. There was round 1, 2, 3, 4. It just seems like it keeps coming. The IRS keeps putting out frequently asked questions. So we like to give our disclaimer that what we talk about is accurate as of this minute in time. It could change an hour from now.
You should get the date and time. As of May 4th, 2020, this is our thoughts. Go ahead.
I think one of the main ones, like we saw in the first question, was on the stimulus payment. So a lot of people still having questions about that. So some key takeaways is that it's going to be based. So whether you're eligible today for the advancement of that money, whether a check or through your bank account, is going to be based on your most recently filed tax return. So that's either going to be 2018 or 2019. Now, if you haven't filed, or if you're, odds are a lot of people out there, it's going to be the situation, especially for investors, where 2018 and 2019 were good years for us as real estate people. But 2020 might be different, right? So if you had really high income in 18 and 19, it does not mean you will not be eligible for the stimulus benefit. It's actually a tax credit on the 2020 tax return. So for those of you who had really high incomes in the past, but in 2020, you're taking a hit from COVID-19, what's going to happen is that when you file your 2020 taxes, then you may get a tax credit. You may get that, $1,200 per person credit at that point in time. So don't be discouraged if, gosh, I had great years then, but what about now? You'll still get that money. It's a little bit of a timing, so you don't have to wait till your taxes are done. But and from that perspective, there's a lot of, strategy and planning we look at. We're still only in, beginning of May. So there are a lot of strategies that could be done this year to get your income taxes, or to get your income lower for tax purposes, and maybe let you become eligible for that tax benefit. Right? Okay. So don't stress if, you haven't gotten it yet, or your income was too high. It's, you still very well could get it.
Yeah. Another thing, I think one of the things that started this whole process was the need for the desire to push back the tax deadline. So a lot of people may know by now that, instead of April 15th, obviously your tax deadline's been pushed back to July 15th.
I hope they know that.
Yeah.
You better.
If they don't, then they don't really care anyway. So
Then they're on the wrong Facebook Live. And they also pushed back the payment deadline too. So originally they actually just pushed back the deadline to file, but not the payment deadline, but they fixed that. So now tax payments and returns are due July 15th. They've also pushed back the first and second quarter 2020 estimated tax payment deadline from April and June 15th to July 15th. A lot of states are following along with the IRS, but not every state. So we tell people they should definitely check out their own states or where they're filing to make sure what the states are doing.
And if you anyone wanted to Google search the keyword term AICPA and state deadlines, so AICPA and state deadlines, you'll get one of the top results would be a PDF from the AICPA. They're updating it every day as states make changes to what their deadlines are for various types of filing. So really great resource.
And keep in mind, this doesn't mean you have to wait until July 15th to file. Obviously, if you're close to being done with your return, expecting a refund, then obviously you should file to get your money sooner than later. Or if you're going to owe money and your return is 90% done, you can file your return now and wait to pay until July 15th. So you don't have to pay on the same date that you file your return, obviously. A couple other things. They also extended the deadline to make contributions to traditional IRAs, Roth IRAs, and HSAs still for the 2019 year. They pushed that back to July 15th. So that's kind of a nice thing. We are here in the state of California. So a lot of our clients file in the state of California and know that they have to pay $800 every year. Those are usually due April 15th. The state has pushed those back to July 15th too. So just for those California taxpayers. So that's kind of the biggest stuff with the deadlines. I think another thing that came out of it was in regards to like 1031 exchanges and opportunity zone deadlines. So one of the most recent revenue procedures were kind of the IRS is continue to explain the rules and the answers and things, is that they talked about, put air quotes, time-sensitive actions and being pushed back to July 15th. So with regards to a 1031 exchange, for example, that would imply that if your 45-day identification period was supposed to end between April 1st and July 15th, or before July, it's been pushed back to July 15th now. So, if you were sold your property and you're coming up on May 31st is your ID deadline, your 45-day ID deadline, that's pushed back to July 15th now. Or if you were past that and you're coming up on your 180-day period to close on the replacement property, that's also been pushed back to July 15th.
That's good to know. Matt, I don't believe that that's as public as it should be. Right. Because either I'm not paying attention or that's not. I didn't know that.
It's what it is they didn't come out and specifically say 1031 exchanges. They explained it as a time sensitive action, but from talking to colleagues in the industry and 1031 exchange companies people that we've worked with and respect their opinions. It's all based on kind of historical stuff, but it should fall, because this has happened, not COVID obviously hasn't happened before, but other situations where they got to push back some deadlines before for various disasters have happened. So, but same thing with ozone. If your 180-day replacement period for your ozone was going to fall in that time period, it can be pushed back to July 15th now.
Got it. Okay. Offline, I'll tell you guys the craziest 1031 story you've ever heard. Your book talks about how 1031s go bad. I have a story for your next book.
Ooh,
if you're gonna write another one, I got a crazy 1031 story. I'll tell you offline.
Bonus material right there.
Yeah, I got it. Yeah, I got it. I got one little trump. Anything you got? Okay. So we've got a bunch of questions coming in here. I'm gonna start firing them off. So let's see. Dario wanted to know, and yes, Josh is serving our country over there in Afghanistan. Welcome. Thank you, Josh. Can we get more of a tax deduction in depreciation of a property by force appreciating it? And it's not necessarily on COVID stuff, but I wanted to put it out there because it is a good question and it has to do with day-to-day real estate stuff. What do you guys think?
Yeah, definitely. Commonly on bigger pockets, right? Forced appreciation, we commonly think about BRRRR strategies by rehab rent. And so when you're rehabbing the property, you're putting improvements into the property, right? Through that forced appreciation, improvements can result in higher deductions and or higher depreciation. So yes, that's definitely a great strategy. And that's why we like the whole BRRRR transaction or, any kind of forced appreciation, because it does help create a much larger tax deduction than maybe otherwise if you just bought a turnkey property. Yeah.
There's also cost segregation analysis that could be done if you're going to be doing big reno. You could do a cost seg. Do you guys want to talk briefly about what a cost segregation analysis is?
Yeah, sure. So generally, when we return, when we look at tax returns, for the most part, when people are claiming depreciation, at least on the building, they're claiming straight line depreciation, which means you have a residential property and then you divide it over 27 and a half years, and that's what you claim for depreciation. Cost segregation allows you to break out the components of the building. So instead of just saying, hey, I bought $100,000 building, we say, okay, well, of this $100,000, maybe 10,000 was drywall, or 10,000, another 20,000 was for cabinetry and plumbing and electrical. And with those different components, we can take a faster depreciation when we do tax returns. So it's not uncommon if you buy a property that if a cost segregation is done, that the first year write-off could be anywhere from 15 to 30% of what the building is. So if you buy a property that has $100,000 building purchase price, maybe 15 to 30,000 will be the accelerated, the first year write-off.
That's a shot in the arm in the beginning, right?
Yeah.
So the bottom line is not everything in a property lasts 27 and a half years. So it makes sense that you get to write off things that are going to need to be replaced faster than the full depreciation of the property, such as furnaces. And people get a little crazy. They're writing off, like you said, sheetrock and stuff like that. Arguable whether you have to change that in 27 and a half years, but you do get to change, you get to claim a lot of the physical components versus the sticks and bricks, right?
Yeah, I think there's a lot of myth that people, associate cost segregation with much larger properties, commercial properties, but we have a lot of clients with single family residentials.
Yep.
It's about the portfolio. If you have a large enough portfolio with multiple rental properties, oftentimes it makes sense. You don't have to be a large commercial property owner to get that benefit.
Yeah, you can do them any size.
You're getting the same amount of depreciation. It's about taking as much of it soon as you can instead of later, so you can get more deductions now, save more money now, take that money, reinvest in more properties, keep
front loading it.
Keep the wheel moving,
Yeah. Thomas had a question that I actually wrote down because I was going to ask you, partly for personal benefit, because I believe I'm in Thomas's boat here. Have any real estate investors received their EDIL loan? I applied. I'll speak personally. Matt Faircloth, the Roaster Group, we applied for an EDIL loan. And there's a little thing at the end where it's like, I don't know if you guys are familiar with the application, there's a little box check. Like, would you like a grant right now? Way up to $10,000. I'm like, well,
yes,
yeah,
please.
Yeah, right. What the heck? I'll check that. Right. And the grant's only attached to how many you get 1,000 per employee. First question is, if someone's watching this right now that has not applied for the EDIL grant yet, do you know, are you still able to apply for that? Let's go there first. You can.
Yeah, you can. It's still available. Although I checked, I think 2 days ago, that the website itself was not accepting applications. But Matt and I also applied for an EIDL loan as well. We got an updated email yesterday or 2 days ago that said, okay, we're having some delays, but it's still being processed. So yeah, I think you can still apply, just depending on when you're checking that website. I believe there's been downtime on there, but definitely for real estate investors, especially landlords, we do recommend applying for the loan. It's a quick and simple process. Have any real estate investors received the loans? Yes, we do have clients who have received the loans. We also have had clients who received the grant. The SBA later came out and had this new caveat that said you have to have, employees in your business, and it's limited to 1,000 per employee. A lot of landlords don't have employees, right? So we're under the understanding that we don't get any part of the grant, but I do have clients as well as friends who have received the grant, even though they didn't put that they had any employees. So it's kind of all over the place.
So they're giving you credit for the quote unquote taxpayer owner of the,
like you are the employee.
But
but you can put yourself, even if you're not a W-2 yourself, they're not, there, as I recall, there wasn't a requirement to submit formal W-2s or more payroll documents. It's just, how many people do you have working for your company? And so, I mean, if it's like a husband and wife team, like me and Liz Faircloth, I can put 2. Or if I've got 5 employees, I can put 5, whatever it is. And as you said, the grant's $1,000 per employee, as I recall.
The funny thing is that wasn't the rule when it first came out.
Right.
When it first came out, it was $10,000. Like, oh yeah, I'll take it.
Yeah. So, right. Me too. Yeah, why not? So I applied for that loan 3 times because they kept changing the application and the site kept crashing. And there was one iteration where you actually had to print it out, hand fill it out, and then scan it in.
That was the very first wave then when you applied, right? When it was the paper format.
Yeah. I don't play around. I'm Johnny on the spot, but because I wanted to get in line, right? And then that went down and they had to do another one, which was the actual application right now is actually fairly easy. So I suppose folks could just Google SBA EIDL application if they wanted an EDIL application, if they wanted to apply for it, correct?
Yeah, I would just I would just search EIDL loan at SBA, and then it'll take you directly to that site. Like I said, sometimes it works, sometimes it doesn't. Just kind of keep trying.
Make sure you're on the SBA's website, guys, because there's a lot of posers. There's a lot of folks out there. It is a free application. People want you to pay them a couple $100 with your credit card or whatever it is, or pose themselves as a consultant for that kind of thing. There's a lot of folks out there, a lot of scammers. Make sure you're on the SBA's website when you apply for that loan. I've had friends that started to apply and realized they were actually not on the SBA's website, that they were on some other posing website that looked like the SBA's website. But if you look at the web address, it was not the SBA's website. Yeah, that's crazy world, man. Okay, let's keep burning through. Let's see, Angelica. I live in Texas. Setting up a C corp in Angelica's getting complicated. She's setting up herself up a C corp in Wyoming, and it's 2 years old with another business advisor group. Should I close it and open an LLC in the states that I would have property? Haven't started investing yet. What do you think?
Well,
you want to tackle that, gorilla? What do you think?
Yes. Well, Angelica, I think the main thing the main take-home point that we want to talk about is for rental real estate. If you're in the business of investing in rental real estate, whether it's a regular property, short-term, Airbnb, BRRRR strategy, those are all considered rentals. We do not recommend holding rentals in a C corporation. There are a lot of downsides to it. For one, C corporations are taxed separately than individuals. So, when you hear us talk about maximizing write-offs and depreciation and cost segregation, those losses that you create, the deductions, get trapped inside of a C corp. So you don't personally get any benefit from it. So that's one major reason we don't actually recommend holding rental properties in a C corp. So yeah, if you're in the business of rental real estate, this Wyoming C corp is not going to be the best in terms of holding title for future rental properties. But if you're some other kind of real estate business, you're a flipper, you're a wholesaler, maybe a C corp might make sense. It's going to come down to the numbers on that one.
What do you think about Angelica's, Matt, if you want to tackle this one, about Angelica's comment about setting up the LLC in the state that the properties exist versus setting them up somewhere else, like Delaware or Nevada? I've heard all this Delaware, Nevada stuff. I'm a pretty simple man, and so I do it like she's talking about here, and setting the property and setting the LLCs up where the properties exist. What are your thoughts on that?
I think it comes to what it's going to come down to is actually asset protection. So unfortunately, you can probably, as you've experienced, Matt, you probably talked to 3 different attorneys and they'll give you 3 different answers on this question. Obviously, it's easy to set up an LLC in the state you're doing business in. But generally, you will also need to, if you don't live in the state that your property is in, you will probably also need to register that LLC to do business in the state that you live in. So there's probably 2 states in that example, depending on where you live and where you're investing. But from a tax perspective, it doesn't matter whether you set it up in the state you live in or the state that you have the property in. So from our perspective, it's not the end of the world whether you do it either way. But you need to, I would say, caveat would be talk to your attorney to figure out what they would recommend. Obviously,
we made it an attorney, not to go deep down on that rabbit hole, but we have we do syndication. So we're buying larger properties. So we'll set up an LLC that's the holding company that owns the asset directly, and then we'll have the controlling entity called like the GP. That'll be an out-of-state LLC. We've not been required to register the dirt holding LLC in other states. We just registered in the state that it's in. A local registered agent company, you pay $100 a year. They'll give you a mailing address and everything like that, like a registered agent kind of thing. So you can have local agent for the LLC there. That's worked out well so far. Because the controlling entities out of state, but the dirt entities in state. So yeah. But as Matt and Amanda said, you guys got to tell me. Matt and Amanda are one half of the conversation. They're CPAs. You've also got an attorney on the other side of the equation, which we'll have to bring onto the show to talk about more legal stuff at some point in the future, because there are 2 sides to the LLC conversation. There's legal and there's accounting, and that. So you got to consider both sides of the equation with regards to setting up entities like that. So thank you, and thank you, Angelica, for your question. Leland, not to spend too much time on this, but Leland just reported that the SBA website is back online. The EDIL website is back online, guys. If you guys have not applied for the EDIL loan right now, get out there and do it after this conversation, because you can get in line, get a grant for the amount of folks you have working with your company, whether that's just you and your spouse, a few other people you have, whatever it is. Go ahead and get that in. And I believe the EDIL loans will eventually start rolling out. This is different than the PPP loan, which is 100% tied to payroll, more of a payroll conversation. Matt and Amanda, we can talk about the PPP loan in a minute if you guys want in that. But the EDIL loan is different than the PPP loan, which is getting a lot of press right now. The PPP loan is because, large organizations like Shake Shack and stuff like that, getting these PPP loans and that. So that's getting a lot of headlines. the EDIL loan is not getting as much press, and I think it should, because it's actually more accessible for real estate investors. What do you guys think?
Yeah, I mean, the way we look at it is, you have the landlords, right, that we just talked about, that are great for idle, regular, short-term, bird strategy. Those are all rentals. EDL is great. Now, the more active real estate investors, right, the flippers, the wholesalers, syndicators, right, for you as a syndicator, or realtors, brokers, for those individuals, oftentimes you have employees, or you're considered self-employed, at least for tax purposes. And that PPP loan would be really good, because part of that, or part or all of it, could be forgiven, which means it's, free money to you. And so I know some people say, well, okay, well, you have to have employees, but I just flip in my personal name, or I'm a realtor and I make money in my personal name. Am I eligible? And the answer is yes. If you file as a sole proprietorship, no legal entities involved, you still could be eligible for the PPP loan.
That's great.
And so, yeah, that's the big one. Like you said, it's, in the news, you hear a lot about these, large companies with a lot of loan amount, but that same scenario does trickle down to people like us, who are much smaller in scale on the real estate side, or just, if you have a business, a consulting business, or anything like that. So definitely take a look at those.
And it's true, the loan amount typically, sorry, Matt, go ahead, Matt.
I was going to say, one thing to keep in mind is, we talked about the EIDL, where you apply for the EIDL loan directly on the SBA website. For the PPP loan, you need to actually apply through a SBA approved lender. So you can go to the SBA website. I think there's a map on one of the links where you can type in your zip code and it'll populate a list of local SBA lenders for if your existing bank doesn't do it for some reason. I would start there, obviously, with your existing relationships. But if they don't, you can find one locally to you.
I've heard of some investors struggling with that, because some banks, we actually had this happen, that a bank that didn't have the operating account for the company we wanted to apply for the PPP loan through, they didn't have that operating account. I knew that they were a good SBA lender, and they said, we're only dealing with in-house clients right now. Right. So if you were not a client, they were not going to talk to you. They have every right to do that. I mean, I don't think that's personally, I think it's good business, but everybody's scrambling to get these loans, so they had to draw the line somewhere, right? And so, I got my feathers up a little bit. That's okay. But at the end of the day, I get why they're doing it, because they've got to draw the line somewhere. So you guys might find this, you guys watching, that if you don't have an existing business relationship with one of these lenders, they may not want to talk to you because of how overwhelmed they are with these applications. You might have to find a lender that's willing to work with you, even though you're not an existing customer. Right.
Yeah, I would just shop around, like with anything. We came across similar. What's a different thing was that where we were banking, the bank wasn't ready yet to take application, versus another smaller bank locally to us was ready and up and running. And they were saying, okay, yeah, we'll help you guys. We're ready to go. So yeah, I think you'll find all different types. But yes, we have heard that from clients who say, hey, I've been with this bank for 40 years, and they won't help me because I don't have an existing loan. I have an operating account. I just don't have an existing loan, and I'm at the back of the line. So yeah, just unfortunately, it's harder than the EIDL loan, like you said, right? Fill out the form online, check the box, give me my money.
We should, all of your real estate investors should have an EIDL loan application in, and if you don't, do it today. We're going to come find you. Do it today. Okay, changing gears. I've got Agent Kramer says SJ website, at this time only agricultural businesses applications will be accepted due to limitations in funding available, and the unprecedented submission of applications already received. Interesting. Agricultural businesses. Interesting. So what do you guys think about, should folks apply anyway, get in line? Do you think folks should check back in a day or two? What do you guys think?
Yeah, I mean, I would apply in the meantime if if the system lets you apply, but also just keep checking back. I've not seen that agricultural statement. This is the first time I'm seeing it, but I think things are being created on the fly, like Matt said earlier, right? Once we're done with this Facebook Live, maybe there's some new rule that says you have to be
the rules will change again.
In South Carolina, you can apply. Who knows?
Yeah, I would go ahead and apply anyway, guys, because that rule may have put that on the SBA's website like a week ago, and they're not. Oh yeah, we that was only for that day. We've changed it, so you never know. Changing gears, Jay Romano, who's from Boston, wants to know: do you think that they will extend the professional carryback beyond 2020? I don't know what he's talking about, but I bet you do. Go ahead.
Yeah.
So part of the CARES Act, one of the things that came out is that if you create an overall loss on your tax return, and we in our world we call that a net operating loss. So if you have essentially negative taxable income on your personal tax return, and if you had it in 2018, 19, or if you end up with one in 2020, as a result of the CARES Act, they're now allowing you to take that loss and either carry it backwards and apply it to previous years where you had income and paid taxes, or you can carry it forward. Now, that only applies for 2018, 19, and 20. So I'm guessing Jay's question is, if you end up with a loss in 2021, are they going to extend the ability to carry back your 2021 loss?
Yes.
It's hard to say right now. I mean, I guess it depends on how COVID plays out.
Yeah, but for now, they've only extended it through 2020. But that's a big one for a lot of our real estate investor clients. People who've done cost segregations, who have had losses in the past that they weren't able to carry back for a refund. Now they're able to do that. So for us internally, we have a list of clients who have losses from previous years that we're going to go through and try to just, determine with the client, should we carry it back for the refund? Do we need the money now, or do we want to carry it forward, thinking we'll get more tax savings in the future?
Do you guys think they will? I think Jay wanted to know, do you think that they'll extend it? Not are they going to do it or not? I mean, this is one of those things that you said the jury's probably still out. So break out your crystal ball, guys. What do you think?
Crystal ball.
Crystal ball.
I guess I would think no. I would think that, government probably needs a lot of tax dollars after all this is said and over. I don't know that'll be on their priority.
Print more, Amanda. What are you talking about? They'll be all right. Yeah. We'll just make more of that.
Should be fine.
Yeah.
So
they get their money tree.
My answer then. No.
A little bit of water on that money tree they got there that's growing money. So.
I don't think they'll extend it either, but I mean, stranger things have happened, obviously. But a cool thing about this, just so people, if they're in this situation, some people a lot of people obviously already filed their 18 returns, hopefully. But if you had a loss in your 18 return, when you filed your 18 return, the rule was you had to carry it forward. But now they're allowing you to go back and, quote unquote, relook at that, decide, hey, would it be better for me to have carried it backwards? So you can work with your team of advisors to file the carryback. You need to file it by, if you want to get your refund quickly, you need to file it on a form 1045 by June 30th. So for the 2018 year. So that's just something people can, if they've already filed their 18, but you can go back and look at it and decide, hey, we treated it one way, we want to change how we treated that.
Got it. Okay. Joshua Smith, my man in Afghanistan, changing it up again on us here. He wants to know, when paying your child as an employee, I love that he's starting there, getting creative. I love it. What's the best way to keep a log of their hours and work done? Just a notebook on calendar or a good way. And wants to know about the max amount that you're able to claim for kids under 18. So I don't know if you guys are versed on this one yet. If you're not, it's okay. But what are your thoughts on this whole process? Any feedback you want to offer here?
Yeah, I mean, this is a great strategy that we talk about all the time with clients. It's essentially, people say, okay, I'm keep giving my kids money, and how do I take a deduction? And the way to do it is to say, okay, have the kids earn that money, right, through your real estate. Have them work for you in your real estate business, and then pay the money to take a tax deduction for it. In terms of record keeping, I think it's, the best practice is to treat them as if you were paying anybody else, someone else's kid or another neighbor. So what would you generally need from that, right? Whether it's a notebook or a time log, a description of what they're doing, what the task is and how many hours, right? Having them log in those hours that are worked, and then paying them. There's actually no maximum dollar amount. The IRS just, the only requirement by the IRS is that what you pay your kids to do is something reasonable for the tax you're doing, right? So your 3-year-old can't be an IT director, be paid $50,000. But your 14-year-old might be getting, $14, $15 an hour, right? At a fairly good rate to be helping out in the real estate business. So yeah, there's no maximum, or minimum maximum dollar amount. It's going to be depending on their abilities. The higher income bracket you're in, the more it makes sense to shift to your kids. We often have times to say, okay, if you're paying your kids $20,000 or $30,000, it still could make sense, even though they're paying taxes, but they're paying taxes at a much lower rate than what you're saving in taxes.
Got it. Yeah, my brother-in-law used his son as a baby model for a marketing company. So he used his son as a baby model. And this is, a year or 2 years. Cause the people may ask like, well, hey, how can I can't put my 3-year-old can't be my IT director, but I'm sure there's gotta be something I could have my 3, 4, 5-year-old do. Well, maybe they can't like go out and collect rent, although my tenants could not resist a cute little face. I don't think so.
Maybe that will work.
I might try that. Can you pay my rent? Right. Let's try that. But yeah, a lot of people use their kids for, other modeling purposes or anything like that, and that maybe not advisory roles or anything, but there's, you can get creative, talk to your CPA. Michelle, if you guys wanted to know this, do you guys have a recommendation means either if your firm is able to handle it, but do you guys have a place on your website that you guys recommend either other accountants and geographies in your network? Michelle wanted to know this off of YouTube. Wants a specific CPA in a specific area. So aside from Northern California, do you guys have a means to recommend or maybe means for people to hear more about your accounting services for your company?
Yeah. Well, we work with clients all over the US. More than half of our clients actually are not local to California in general. So we can work with clients all across the nation. I think that's important when you are looking for real estate specific CPAs, is that they need to be able to work in your location as well as where you invest. Right. Because Michelle, you live in Northern California, you might not be investing there. You might be investing in Tennessee or Florida. So you need to make sure you're working with a CPA who is well versed in those areas. So we don't have a list of CPAs that are, in different geographical areas. It's more of in the interview process, talk to them. Have you dealt with this state? Here's where I'm looking to invest.
Just to hook Michelle up here, what's your company's website?
Oh, it's www.keystonecpa.com.
Easy enough to remember. KeystoneCPA.com. Michelle, check them out. Okay. Jessica's got a big question here. We're going to put it up on the screen, but it'll probably block us all out. There you go. We have to hide behind Jessica's question. I'm currently house hacking, but it's a lot going on here, but it's interesting because to do with the house hack model, right? So I'm currently house hacking a duplex in the process of filing my taxes, and I'll bottom line it here. Jessica wants to know, should she file depreciation on both sides of the duplex? Meaning when a house hack means she's living in one unit and renting the other one out, for those of you guys aren't familiar with that term. And so Jessica wants to know, should she depreciate the entire duplex or should she depreciate just the part that she's renting? What do you guys think?
It's a good question. It is one we get a lot of. There's a lot of confusion or misunderstanding of how that 250 gain that she's talking about is on the back end if you sell your primary residence, right? But technically speaking, she's supposed to be treating the only portion that's considered a primary residence in that example is the portion that she's living in and maybe a percentage of the shared space in that one unit that has people living in the other rooms. That's a technical rule. So under that rule, I would say take as much depreciation as you can because, you don't have to recapture the depreciation. The 250 is going to be available to you whether you you live in part of it or live in the whole thing. It's just it's going to be based on a percentage of your gain though on the back end. So if you use 20% of the property over the years as a primary residence, you're going to get up to 20.
Sounds like the best of both worlds if in that, right, depreciate the whole asset, right, including the unit that you live in, and then when you sell, you can keep up to 250 in gains if you're single in that. So it sounds like that sounds like the best of both worlds as a strategy, right?
Yeah, I mean, it all comes down to numbers, but it's definitely, especially if a lot of our clients with these short-term rental models, they're killing it on the cash flow. So sometimes the income is outweighing the depreciation. So, the goal would be to generate as much depreciation as you can to bring that number down to zero. So,
Yeah. George wanted to know, should I quit claim my personal property to my LLC for tax purposes? I get this question a lot for folks that are looking for asset protection that an LLC may have. And they've talked about, personal property in an LLC. I've answered that one on my YouTube page a few times. You can get to it by just going to youtube.com/DeRosa Group. But George wanted to know, are there tax benefits for holding personal property in an LLC?
So when they say personal, is it referencing like a primary home?
I'm assuming that's what that means.
Oh, okay.
Not
No,
not rental properties, primary home in an
primary
LLC.
home to an LLC.
What do you think?
From a tax perspective, no, there's not really any added benefit. You mean it's the same, you get to deduct the same interest and property taxes, you claim a home office. So no, there's not really any benefit from the tax perspective to move it over to an LLC.
Mm-hmm. Yeah, I would agree with. I think actually losing by doing that. I think you're going against the grain. There's a lot of rules that are out there for personally holding a property in your own name, your personal property and stuff like that you might be circumventing by moving it over to an LLC. I know from a lending perspective, there are loans that are out there that are geared towards personal ownership, low money down mortgages and things like that. Moving your property to an LLC will negate some of your ability to get some of the great financing that's out there provided by great organizations like FHA and things like that. And if you move to an LLC, you're going to make it viewed differently. So I recommend you don't do that.
That primary home exclusion that we talked about from the last person, right? That's the area of, okay, well, my LLC is owned 100% by me. That might be okay because for tax purposes, it's still me. But if my LLC starts to be owned by, my spouse or my girlfriend or who knows, now you start to have issues with that primary home exclusion before you sell. So yeah, that's a, potential problem.
Good stuff. We've got Daria coming in from overseas, and we've got a Bigger Pockets has an enormous worldwide listener base. People watch from all over the world, and so I want to acknowledge our international listeners and all that. So Daria wanted to know, for a foreign real estate investor, is it better to have a property in your name or in an LLC? Now, here's my 2 cents on that one. We work with a lot of folks that are looking to invest in the U.S. from overseas, that are investing with us in passive syndications and things like that. To invest in the U.S., your money needs to be in a U.S. bank account with a U.S. Social Security number or a U.S. EIN number first. That's what you got to do before you even are consider investing in the U.S. Now, I know that you can do either one of those two things. Is there a tax benefit for doing either one of those? I mean, this is getting towards a wider end of the spectrum here, but if you guys want to tackle that one on investing from overseas, jump on in.
Yeah, I mean, so we don't actually deal with foreign investors of U.S. real estate within our firm. The kind of the exposure we have is more of what you said, Matt, where we have syndicator clients who are dealing with bringing in foreign money. And you're exactly right in that we typically recommend the foreign investor form a U.S. LLC. And then through that LLC, invest in the syndication. The reason for that being, if you don't do it that way, then oftentimes what happens is the syndicator group will be required to withhold taxes on your behalf. And foreign investors don't like that, right? Because we don't want our profits to be withheld upon. So that's one way to get rid of it. Now, are there going to be, issues, kind of cross-border stuff? That's going to depend on, where you actually, your home country, what there's any treaties or any requirements on how they tax foreign income. So, so that's the part of it that we don't really get involved in. But yes, from the U.S. perspective, it makes sense to have an LLC, then make the U.S. LLC, then make the investment.
Okay. I've got a question here that's more like a financial advisor kind of thing for you guys, not less CPA tax kind of stuff, but more just advising a client on this. Thomas wanted to know, Thomas coming in from Facebook. Thank you, Thomas. Wanted to know, would you recommend reaching out to your lender to defer payments? Talking about mortgage deferment, a lot of that going on right now. A lot of people are taking mortgage deferments. So would you advise someone to do it even if they don't need it right now? Let's say Thomas's cash flow is high, tenants are still paying, God bless, but lenders are either offering it or he knows that his lender will do it. Would you guys recommend somebody ask for it, even if they don't need it today? What do you think?
I think I would definitely recommend reaching out to find out more about what is offered, right? So if you don't need it today, but you may need it, or it's good to have a cushion in case it's needed, it doesn't hurt to reach out and find out, right? What, is it available? Is it going to hurt my credit, right? I think that's one thing people are concerned with, is it going to hurt my credit? If not, then, we just want to know what's the downside. If there's no downside, it definitely could make sense just to give you that cushion.
And I think if you are going to do it, set aside a kind of maybe a slush fund that you're setting, if you don't need it right now, but you're going to do it, maybe you're setting aside the money that you would have otherwise paid in the payments into kind of a separate account so that you have the money available in the future to make the extra payments when you need to.
Yep.
Obviously, if you If you can't do that because you're, living paycheck to paycheck and you're doing this because you need to, then that's a different story, obviously. But if you're gonna defer the payments, make sure you have the ability to pay them back, and you're setting aside money to do so.
Yeah. Yeah, I agree, and I'll speak personally. We took deferment on some loans when it was offered up. I knew our lenders were willing to do it, and so Thomas, I would say yes for the same reason you said, insurance policy. But I completely agree with Matt that don't just take the money and spend it or whatever. I mean, if you got to take the money to and use it to keep your properties up and going, great. If you don't need it, then reserve it. Almost like keep it in like a separate reserve fund or in that. But the biggest bottom line for everyone, if you're thinking of or already did get a deferment for your mortgage, you need to understand all the terms. Where does that money go? When do you have to pay it back? What are you need to read the fine print and understand what the repayment terms is on these loan deferments, because it's not just free money. It's not just don't pay your mortgage for a couple of months and everything's all hunky dory. You need to understand what the other shoe that's going to drop will be for those mortgage deferments. And so that's my advice, because there's always two sides to it. So you took what is the consequence for the other side? When do you have to pay the money back? I had a friend that was offered a deferment from his bank, but the bank said, yeah, great, we'll defer. But after that 3 months is up, you owe 3 months worth of interest. So he ended up not taking it because he didn't want to have that enormous balloon payment in 3 months that he would have to do. Similar to what Fannie and Freddie are doing on larger apartment buildings. They're doing something similar to that. Well, they'll defer you, but you've got to pay it back very quickly. And so it's almost not a deferment. It's just like a, kind of shuffling the money around a little bit. I don't like that. So
yeah. Well, now under the CARES Act, there's new opportunities to tap into retirement accounts. So that's, helpful for some of our investor clients that now you can borrow up to $100,000, or you can just get penalty-free distributions to kind of use in the interim as a cushion.
Yeah.
And, if you're borrowing from your 401k, you still need to pay it back with interest, but that's different because that's paying yourself interest rather than paying interest to the bank. So, there's other options out there now in terms, for getting some cushion on cash flow needs.
Good stuff. Changing it up again. Ajing wanted to know, if we get a PPP loan, are we still eligible to get the EIDL loan?
Yes, so you're eligible and can receive both loans. The only requirement is that you can't double dip. So if we're saying we're using PPP loan to pay for payroll, for example, that's going to be forgiven, then that money cannot also be what you claim for the grant money that is offered by the EIDL, right? So kind of common sense. But yes, you can be eligible and apply and obtain both loans, but no duplicate expenses claimed on those.
Okay. All right, guys, a few more questions before our hour is up. But Amanda and Matt, the feeds are blowing up here. So I'm going to ask you guys for a big favor. I'm going to ask a few more just a couple more questions, but I need you guys to do us a big favor if you can promise to do this. Will you guys jump on the Bigger Pockets Facebook page and filter through and answer a few of these questions? You're more than welcome. And then people can have your information there through Facebook and everything like that. Would you guys be open to jumping on Facebook and just maybe dividing and conquering? Since there are two of you, it'll take half the time. It's great. To jump on answering some of those questions on Facebook that we didn't get to, because we've got a ton that we didn't get to today. So if you guys are watching YouTube and you want to get in touch with Amanda and Matt, pop your question over to Facebook and they'll read through the Facebook feed on the Bigger Pockets Facebook page and answer those in that. So you guys, please keep this conversation going. Now, I've got Sherry on YouTube had a great question, and I'll paraphrase it. If someone owes 2000 earlier taxes. I mean, she's turning herself in. I owe money from 2016, 17, 18, 19. Right. So will I get my stimulus in my tax returns? So what do you guys think about that? Now, I mean, Sherry's got some catching up to do. But if someone owes any money from prior years, do you know if the government will withhold your stimulus check?
Yeah, great question. Thank you so much for being so candid, Sherry.
Yeah. It's okay. I know a good CPA that can help you. I know folks can help you.
If Sherry's really her name.
Right. Never know.
So the answer is yes. Fortunately, the IRS hasn't. They've indicated that yes, even though you owe back taxes, you will still get the stimulus check provided that you qualify. The only times where you may not get it would be if you owe child care. Child support. Sorry, yes. So back child support people, IRS considers that very bad, and they will take stimulus check money. But other than that, if you owe for the last 5-10 years, you still get that money up front.
Good stuff. Shay, I appreciate your candor. Guys, so listen, here's the deal. Keep your questions coming. Amanda and Matt are going to keep hooking you guys up with their knowledge. These guys have been great Bigger Pockets contributors. They've been great folks to lean on. Everybody needs a CPA in their corner. These are two CPAs the Bigger Pockets has in our corner as our community. So they're community leaders here. They're folks that you guys can lean on to ask questions of. And if you want to consider using their business, Amanda and Matt, what is your website one more time?
It's www.keystonecpa.com. That's KEYSTONECPA.com.
Awesome. KeystoneCPA.com. They work in all 50 states. Reach out. You guys can start the conversation there. And obviously, they're going to go on the Bigger Pockets Facebook page and pop through about an hour or two, give you guys a little bit of time to populate that up with some really great questions and pick their brain a little bit more. Really, really grateful that they're going to be willing to do that for you guys. Go to biggerpockets.com. After you guys type that question in for Amanda and Matt, go to biggerpockets.com/store. Treat yourself. It's Monday. Treat yourself to a copy of the book on advanced tax strategies and their book on basic tax strategies here. Get both books. Don't just get one. Get both books. Treat yourself. These are great manuals. They're read them cover to cover, and then put them on your shelf as a manual that you guys can reference anytime you have a tax matter. Right before you go to their website and ask them questions personally as a CPA, you can also get a lot out of these two books. I mean, this is maybe $30-$40 you guys can have brilliant knowledge from CPAs. If they buy it off of Bigger Pockets, do you guys remember what the I know Bigger Pockets creates these great advantages, add-ons that you guys get. It costs you like $3 more than buying it off of Amazon, but you get a ton more knowledge. You guys remember what they get if they buy it off of BP?
Yeah, so there's actually a lot of bonus items for legal entities, self-directed investing, Q&A stuff. We had additional information regarding opportunity zones and 1031 exchange. And also, I believe this Thursday is when we're doing the private author Q&A for those who've purchased from the website. Yeah, this Thursday afternoon.
You guys are so humble. You didn't tell us that, man. You guys, you're going to let me go without slipping that out there. Listen, do it now. If you guys buy this book right now, you'll get to pick Amanda and Matt's brain live. These Q&A sessions are strictly for people that bought the book through Bigger Pockets. It's this Thursday. You guys need to buy is if they buy the advanced book or the basic or either one?
It's I don't know if it's either one. I know for sure it's for the advanced book.
Okay.
But I'll find out from Katie.
Both books are phenomenal. I demand you buy both of them, but pick them both up, and you guys can get on that private Q&A session where Matt and Amanda are going to go deep dive. We're able to just scratch the surface today, but this is going to be a great behind the scenes look. One-on-one conversations through not one-on-one, but a big group conversation with Amanda and Matt, and a little more hands-on with them. They can go deeper dive on your questions, and we're able to do here on social media. So next move after this conversation, if you guys type in a question that they're going to go type their answers to, go to biggerpockets.com/store. Treat yourself to a copy of their book, and then join them on Thursday for that live session. That's going to be awesome. So Amanda and Matt, thank you guys for being here. This has been really, you guys have been really giving, and I think we're gonna have you guys back. And then talk more COVID, talk more CARES Act. There's a lot we didn't get into.
We need to hear your horror stories. So.
Oh man,
the 1031. Yeah,
we'll have to do that have to be like a happy hour conversation. We might need a cocktail for that one because that's a doozy. But anyway, I'll get there. I'll even tease you guys. Another conversation we didn't get to is I want to know what Amanda and Matt think the future is going to look like for tax code changes, and is there going to be another CARES Act? Is there going to be the sequel, another thing that's going to come down the pipe? Because some people have said that there's going to be another round of stimulus that's going to come out because the CARES Act's been out for a little bit. Is there something else coming? And I'm sure you guys have an opinion on that, but we'll save that for the next time because I'd love to know what you guys think about that one too.
Sounds good.
Final thoughts, Matt and Amanda. Any one more time, how do people get a hold of you guys? Bigger Pockets, websites, all that stuff. How do they get a hold of you to keep this conversation going?
I think our website is the best way to do it. Like it's on the web, www.keystonecpa.com. I think the one thing I want to leave people with is, now is the time to get in touch with your tax advisor. Although, many people are still working from home under the quarantine, but lots and lots of changes all the time. So keep updated, get on Bigger Pockets. Reach out, if you want to take advantage of all the tax breaks. Like Matt said, we only scratch the surface. There's so many things, but definitely, keep the conversation open so you know what's available to you.
Yeah.
Great.
Thank you for having us. It's been fun.
Oh, you're quite welcome, guys. We'll definitely have you back on the Monday at noon show. Call it like, I need a cool name for this show, but I don't have it yet. But that's okay. Just right now, it's just Facebook Live with Matt, and YouTube Live with Matt on Mondays at noon. So grateful to have you guys here. So great to have you guys as part of the Bigger Pockets family and contributors here. Good luck on your live session on Thursday, guys. Thank you, audience, for watching. Be sure to check me out at my website, DeRosa Group, DEROSA Group.com. You can hear more about what we offer, including our program called DeRosa Insiders, where you can pick my personal brain one-on-one, and our YouTube page, youtube.com/DeRosa Group. Thanks again, and we are out. See you guys next week. Thank you.
Thanks.